Many mutual funds in India now allow the investors to invest in US stocks. Let me help you to know why you should invest in US stocks oriented mutual funds for greater returns. If you want to outperform the market returns, the best answer is to diversify your investment portfolio into different sectors, industries, and market capitalization. Very few investors tend to look beyond India's border for investment opportunities. But nowadays, Indian retail investors are diversifying as well as widening their investment horizon to gain massive results for foreign equity markets. Investing in developed economy, which is home to various giant business houses, is always a good decision. Before investing in US stocks, there are some questions which should be answered. The second question is how to invest in US stocks. Retail investor can invest indirectly in US market. They can start with even small portfolios. You can invest in US stocks through mutual funds and ETFs. Investing through mutual funds is the easiest way to invest in US stocks listed outside India. There are many mutual funds in India that invest in US stocks, but the selection and allocation for these funds require continuous in-depth research. Many mutual funds in India now invest partly in Indian stocks and in US stocks, thus gives you the benefit to invest in domestic as well as international market at the same time. The next option is to investing in US stocks through ETFs, that is exchange traded funds. You can also gain exposure to US stock by investing in ETFs. There are direct and indirect routes available for ETFs. You can purchase US ETFs directly via domestic or international broker or purchase an Indian ETF for international investment. If an investor wants to grow their wealth and outperform the Indian market, then they should invest in US stocks. There are various reasons to invest in US stocks. The first is it provides you the opportunity to invest in global markets. While investing in US stocks, an investor can invest in biggest global brands like Amazon, Microsoft, Apple, and many others. Thus, this will provide an opportunity to investors to diversify the portfolio to international markets in the companies that generate good returns and are well known around the globe. The second reason is largest and most liquid market. US is the topmost country in the world in terms of market capitalization, having the market capitalization of $44.3 trillion. And moreover, US stock market is also one of the most liquid market in the world. The New York Stock Exchange and the Nasdaq are the largest stock operator worldwide. US market also helps you to invest in MNCs directly rather than the local Indian subsidiaries. Many investors living in India invest in international MNCs as they assume there is a high level of governance, technological proficiency and transparency in MNCs. However, investing in Indian subsidiaries is often a more expensive proposition. Thus, it is profitable if an investor directly invests in parent companies. US markets provide you superior returns. The US stock market outperformed the Indian stock market and various other stock markets of different countries over the last decade in pure dollar terms. The return of for January 1, 2015 to December 3, 2020 of Nasdaq Composite US was 21.18% and Nifty 50 index was 8.09%. Now let's talk about the performance of some US equities fund. The first one is Parag Parekh Flexi Cap Fund. The top 5 holdings of these funds are Alphabet, ITC, Microsoft, Bajaj and Amazon. The trailing return of this fund as compared to category averages for 1 year is 43.64%, while the category average return is 39.41%. And for 7 years, the return of this fund is 18.83% and the category average return is 16.13%. This fund has outperformed the category average for 1 year return and for 7 year return. The next is Motilal Oswal Nasdaq 100 Exchange Traded Fund. The top 5 holding for this fund is Apple, Microsoft, Amazon, Tesla and Alphabet. For 1 year return, the fund has generated 1 year return of 46.84%, while the category average return is 39.41%, and the 7 year return of this fund is 21.78%, while the category average return is 16.13%. This fund has also outperformed the category average returns. Next is Franklin India Feeder Franklin US Opportunity Fund. The top holding of these funds are Amazon, Microsoft, Mastercard, Alphabet and Visa. The 3-year return of this fund is 21.67%, while the category average return is 12.75%, and the 5-year return of this fund is 19.59% as compared to category average return 16.90%. This fund has also performed the category average for 3-year returns and for 5 years return. Now let's talk about the taxes on capital gains. The funds which allocate less than 65% in US equities are taxed as per the taxation on capital gains from sales of equity funds in India. On the other hand, the funds which do not invest in Indian equities, rather invest only in US equities, or where the allocation in US equities is more than 65%, those funds are taxable as per the taxation on capital gains from sale of debt mutual funds in India. Applicable tax rate on capital gains from sales of equity mutual funds in India. Investment for long term, that is for period more than 12 months, are taxable at 10% without indexation plus applicable surcharge plus 4% cess. Short term period, that is less than 12 months or equal to 12 months, are taxable at 15% plus applicable surcharge plus 4% cess. The applicable tax rate on capital gains from sale of debt mutual funds in India are: for dividend income, nil; for long-term capital gains is 20%, and for short-term capital gain is as according to the slab rate. Thank you for watching, and please do like, share and follow our channel for more investing ideas. You can also read more investing ideas on our investing blog blog.pawealthadvisors.com.